So I wanted to have a little fun today. A very different show for me. I really, really like Gary Black. I find his analysis very intriguing and very helpful. Watch him on several shows when he's interviewed. Really appreciate what he brings to the table. I also like Warren Redlich very much. Warren, I was on his show. It was the very first show that I was on after I started my channel. He's been on my channel many, many times. We've had great discussions. We try to outdo each other as being the biggest Uber bulls in the world. Really like most of Warren's analysis, I think, is spot on, and he's very, very good at thinking outside the box. I appreciate that so much about him. So, but one of the things he likes to do is he likes to go after folks like Gary Black, and even has names for these individuals, and causes a lot of angst in the community because of his interest in showing them up and proving them wrong. That's not my general inclination. But what happened today is that Warren put together a show where he went through Gary Black's recent statements on Twitter. On X, formerly known as Twitter. He went through these one at a time and tried to give his own analysis and breakdown and where Gary's wrong and where he thinks he's right. And I thought, this was really a good analysis overall of the whole Tesla situation right now. And by looking at Gary, looking at Warren, and then having my own opinion on top of both, I thought this could be a very, very interesting look at the total picture right now. Anyway, you might want to wait till the end to decide whether to like this, because maybe this will be the worst show ever, but maybe it'll be kind of an intriguing way to look at things. And hit subscribe, hit notify, do all that stuff like you normally do, and of course Patreon as well. So let's start out and let's see how Warren sets this up with the very first set of questions that he had with regard to some of the things that Gary has been talking about recently.
On Tesla, Gary Black, I just called this Garyisms. Number one, he compares Tesla whatever fits his current narrative. So if Gary wants to compare Tesla to auto companies, he compares them to auto companies. If he wants to compare Tesla to big tech, he compares Tesla to big tech. He wants to compare Tesla to the S&P 500 or some other index. He just chooses whatever fits the narrative. Okay, I got more Gary companies.
All right. So number one, he says that Gary Black will change how he makes his comparisons based on what he's trying to prove. I would say, number one, almost everybody will take their best argument in any situation that they're in, but I don't want to defend Gary Black 100% on that, because I think we do need to have some consistency in that. And I do think that Gary Black has failed to see that Tesla is moving towards becoming way more than a car company. But Gary also is looking at things from the perspective of somebody who is a traditional investor, a Wall Street investor. And we've seen over all of history, I can give you example after example of Apple and Amazon, et cetera. You know these examples probably yourself, where until Tesla is doing 10% or 20% of their volume, or 10 to 20% of their total profits, in some other category than auto, they're still going to be traded more or less as an auto company. Does that mean that people on the street are so stupid that they aren't seeing that there's a future where Tesla might be something different? No, but there has to be more actual activity, more actual profits before they're going to start trading it in a different way. So I think that it's wise on Gary's part, if he makes himself clear, Tesla right now is an auto company in terms of that's where most of their sales, most of their profits are coming from. But Gary can turn around and say, look, they're high tech. Look at all the things they're doing in high tech. We need to start looking at them as more of a tech company. And what will that look like in the future? That would be the way I would look at it. I believe that the street would be smarter to be even more forward thinking, but the street tends to only think 6 months out. And that's been true forever. And it's just part of how things work. All right, let's go on.
And then I got more similar like that. He asserts he knows why the stock is going down. Why is the stock down today? Gary knows. Whatever. This is, I really believe there's something here. And I'm critical of Gary. I want to say that I think Gary, in effect, provides a service by enabling those of us who want to tell the Tesla story to use Gary as something to tell the story off of, to tell our story off of. He gives a basis to see this is, and by the way, he claims, he asserts he knows why the stock is down. If you knew why the stock was down, why didn't you sell short? Why didn't you short the stock? Then you would know in advance it's going to fall, right? He ignores other likely reasons like macroeconomics. So here he says Tesla stock continues to struggle since the versus the NDX, some index, minus 26% versus minus 7% versus such and such an index since July 19th earnings call over worries about Tesla pricing and margins. How does he know that's what's driving the stock down? Interest rates are up. Tesla sells complex, large products. There's issues going on in the Chinese economy. There's issues going on with the Federal Reserve and interest rates and the U.S. economy. How does Gary know what causes the stock go down? If you knew, hey, I know why the stock market is down, you'd be able to predict when the stock market's going to go down. You'd be able to predict when Tesla's going to go down. And you would then trade based on that knowledge because you're so smart, and you'd be a trillionaire very quickly.
All right. So I think in this particular case, Warren gets it part right and part wrong. So first of all, I think the logic is wrong. The fact that you take a look at what happens on any given day or any given hour in the stock market, or even any given week or month or year, and then you analyze looking backwards and you say, I think this is what happened, or even I assert, or even I believe, or even I know, depending on the level of certainty that you might have, that the stock went up or the stock went down or the stock went sideways because of these reasons. That's not going to make you a trillionaire or a billionaire or any kind of heir, because that is looking backwards and being able to see what took place and now analyzing the war after the war is over. That's a lot different than being able to predict in advance what's going to happen on any given day. If I could have predicted that Fitch was going to downrate the ratings for the entire United States government a few weeks ago, sure, I could have gotten very rich that day. I can't predict those kinds of things, and I can't predict what the entire market's going to do in response to those kinds of things. But after it's over, I can certainly look back and say, oh, the reason the market was down today was primarily because the Fitch rating situation. Now, there's the part that Warren is 100% right on is there is huge complexity in any market. There's huge complexity in our daily lives. Even my own personal life, I can't always look back even and know for sure why certain things that I might have done or things that happened to me on a given day were affected by this, that, or the other. It could have been some complex version of all three. With regard to the market, of course, it's hugely complex. He's 100% right about that. And all of us pundits, including Warren, make all kinds of statements about what just took place, positive, negative, elsewhere, and make those with a great deal of certitude, because that's what analysts do, and that's what pundits are paid to do, is to make those statements with certitude. But Gary Black is sometimes, I think, very wrong in not asserting that it had way more to do with the macro than it did with any particular Elon Musk action on any certain day.
And I know people say, oh, there's billionaires who've succeeded in trading. No, there's billionaires who've succeeded somewhat in trading, but what they really succeeded at is getting other people to invest money in with them and charging fees on the money they trade for them. Charging fees, charging carried interest, and so on.
Now, that particular statement by Warren is a little bit cynical, and it certainly is right, wrong. We certainly know that Warren Buffett made his money trading. Now, does that mean Warren was trading in and out and he was a day trader, a monthly trader? No, he's a long-term trader, but he makes his money by picking stocks and picking companies that he sees that have massive long-term potential, and then getting involved in them and helping them to move forward. Sometimes, not sometimes, I guess, not always, because I don't think that he was telling Apple's board how to make certain changes. That's been his biggest winner of all time, if I remember correctly. But in some cases, he's getting very, very involved in helping these companies to become better than they are. But for the rest of us, there's lots and lots and lots of people. I know people that have made vast amounts of money by trading stocks and are still making vast amount of money by trading stocks, by picking winners and losers. Some of those are professionals and some of those are retail investors, but lots and lots of people make money doing that, and serious money.
They didn't make billions trading. They made billions managing other people's money. Investors believe Elon's rhetoric that he can make up the lost margin by selling more FSD, then the stock wouldn't be acting so poorly. Well, it probably doesn't help that you don't tell that Gary has this large audience and he tells people Tesla won't be able to make money on FSD. Gary's constantly pounding the Bible saying, well, Tesla doesn't have anything special with FSD. Waymo and Cruise are just as good. Even if Tesla gets there first, the other will be right behind, blah, blah, blah. When you're telling everyone that FSD doesn't matter, then your audience is going to believe FSD doesn't matter.
So there's no question that I don't agree with Gary with regard to what I think the future for Tesla is with regard to FSD. I probably am very, very close to agreeing with Warren, although I have modified my position recently to say that I don't think there will be a huge percentage of people that will be putting their cars out onto the streets. It might be around 20% of private owners who are willing to let their car go out there and have customers of their car using the robotaxi system. Okay, I've done it with Turo, and there are all kinds of benefits and disadvantages to that. And I am an entrepreneurial type person, but I don't think more than 20% of the people will do that. Now, I think there will be large fleets of cars out there where private owners will have 20 or 30 or 50 or 100 cars, or even one or two or three. I might end up being one of those, but I don't think it'll be the private. So with regard to Warren and Gary on this one, though, I think Gary Black is not in the business of pumping Tesla stock. I think Gary Black is in the business of talking about what he believes in his own mind is going to happen in the future. And therefore, in this particular case, he's saying, I think that Tesla should do certain things because I don't think this is going to happen, or I do think that is going to happen. And it's not his job to pump the Tesla stock. It might be his job to advise as a stockholder, as a major stockholder, and somebody who does invest other people's money.
You outside Twitter believe this with Tesla's FSD take rate at less than 10% and falling. We don't know what Tesla's take rate is on FSD. I don't know how Gary knows what the take rate is. I haven't seen the numbers. The take rate is not really important yet. Frankly, I'm happy the take rate is low because when Tesla delivers, working FSD without nags, then a lot more people will upgrade and the price will probably be higher then. Like once Tesla crosses a certain threshold and FSD becomes that more useful, it's not going to be $15,000 anymore. It's going to be $25,000. Maybe it's going to be $100,000 we're going to run as a robo-taxi. So I'd rather people didn't buy it yet.
So I'm not going to argue with Warren with regard to this one. I think his analysis is pretty good. I do believe, and I have stated, and I continue to believe, that there will have to be a two-level FSD. There will have to be a FSD level for people who are not going to be on the robotaxi network, and maybe that will be around $15,000 or whatever it is now, or the $300 a month. And then there'll be people who do want to provide their car in the commercial environment, use the app, and those people will either pay a higher one-time fee, a higher monthly fee. I'm not sure how all that's going to work, but I have tried my best, and maybe you can put in the comments below. I can't think of a way for Tesla to do this without having a two-level deal, because otherwise, who's going to pay $100,000 for a car that they aren't going to put, $100,000+ for a car that they're not going to put out as a business opportunity. It's just not going to happen. I think we can all agree on that. Oops.
Many PMs are frustrated. PMs are portfolio managers. Gary claims to speak for portfolio managers. I don't know how many portfolio managers there are. I don't know how many Gary actually knows. I don't know how many that talk to him. I don't know how many tell him the truth, how many blow smoke up his ass. We don't know. Many PMs are frustrated that Tesla is pursuing short-term discounting rather than building a long-term brand equity through education of legacy auto consumers about the benefits of going EV. I am not. So I think that people like Gary, and we're going to have Emmett Peppers in a minute, people claiming that they know how that Tesla should do advertising. This is not easy. The idea that there's just some magic campaign that you're going to persuade people, you're going to tell people all these details about Tesla. It's a complicated message. It's best told by people telling their friends.
Okay, I'm going to hit three different things here. Number one, Gary Black merely says that many portfolio managers. He does not say most. He does not say all. He does not say he represents portfolio managers. He only says that he's spoken to many who say that they think Tesla should advertise. And there are plenty of people that think Tesla should advertise. I think it would be wise for Tesla to advertise. I have stated early on, way before the first of this year, when the price cuts all started, I said Tesla should advertise. I was impressed by the effect of the price cuts and the effect that they had, and I wheeled back my impression a little bit and said, well, this worked pretty well. Doesn't mean Tesla shouldn't advertise, and it's not that complicated. It's not that complex. There's hundreds of top-notch advertising agencies out there that can go in and, do a tremendous advertising campaign that would definitely give return on investment for Tesla. I don't have the slightest doubt of that. I mean, look back to Apple's Super Bowl ad. Look back to, so many different things that we could talk about. I've been in advertising my entire career, over 50 years. I continue to be in advertising. I'm a marketing consultant by trade right now. That's my primary business. And I can tell you that I have no doubt in my mind that Tesla could get a significant ROI and probably actually do better by advertising than they are by price cuts. But I do think that there was a certain brilliance to the price cuts that Elon did earlier this year. The third part was with regard to, I forgot now, we'll go back.
Yeah, actually, Brian texted us. FSD was driving me on I-10. My car tried to merge into me. FSD saw it before me moving into the shoulder lane. Actually, I was driving last night. Plan, how much money is this going to cost? What's the message going to be? Is this a series? Is this a Netflix series with all the advantages of a Tesla? Like, I heard one person say Tesla should just do a Netflix series.
So, in this particular case, Warren is doing something which we know in logic and even in law is not really logical. He's taking one particular person's idea of doing a Netflix series as a way to put down the entire idea of doing any advertising at all. A straw man, I guess you could call it, as kind of a straw man. Not a great way to argue, Warren. So let's go on. So then we get into catalysts. All right, and Gary Black has famously been doing catalyst lists for a long, long time. I now have my catalyst list, and I put mine up from time to time. Mine are very, very different. Well, mostly different from what Gary does. So this will be kind of fun. Warren's going to go through these one at a time, and he's going to find something negative about every one of them. And I found that odd. If you're going to make a strong argument, you might want to say, on this one, I kind of agree with Gary. So let's see how Warren takes these one at a time.
So I want to go through his catalyst. He says, number one, Model 3 refresh, Highland 3, cool. We're going to have a little bit more about Highland in a minute. But that's speculative. We don't know that Highland is happening. I know everybody else says, oh, Highland is locked in. And Warren's the only one who says no. Well, Tesla hasn't said Highland's coming. They sure as hell told us Cybertruck is coming. Well, Tesla doesn't want to Osborne the Model 3. What are they Osborning with Cybertruck? Why are they okay with Osborning?
All right, let's take this apart. So number one, Warren Redlich is probably the only person on the planet that doesn't believe that Highland is coming. Now, when there is a refresh and they don't call it Highland, they never use the word Highland. But it's got, tremendous, beautiful new changes to the hood and new changes to the lights and new changes to the interior and kind of new changes overall. And it's way more than a refresh. It's really a model change, and they don't call it Highland. Warren might be able to say, oh, there was no Highland refresh or no Highland model. And you'd be correct. I don't know if you'll do that or not, but Warren, don't do that. If this is a full-on change, then let's agree that this was coming. And every evidence that I see, right now, I would be shocked if this is not a very different car that's going to come out. Now, he goes on to make this comparison between on the Osborne effect, you're talking about a sedan, four-door sedan, that is being upgraded dramatically, and it's going to be maybe even a lower cost. And if you put it out there and you got everybody looking at these pictures and looking at all the specs and looking at the price, of course it's going to Osborne the next vehicle. I mean, even the speculation is probably Osborning it now. So I think it's pretty obvious that that would take place. Now, when you're trying to make the comparison between that and the Cybertruck Osborning the Model Y and the Model X, yes, it could. There could be people that are not going to buy an X or buy a Y right now because they're waiting for their model, they're waiting for their Cybertruck. But the reality is, unless you've got your order in already, you're not going to get it for 4 years. So I think you should probably go out and buy your Model Y. I think this is a really, really poor argument. I do think there's a Model Fresh Highland coming. I have stated I think it's going to be a fairly significant change. I think it is going to be definitely a catalyst, and it should move the market when it is introduced, assuming the two things I've said. Number one, it's really cool looking. And number two, it's priced a little bit less. Eventually, the base car is priced a little bit less than the current Model 3. Let's go on.
Model X and Model Y with Cybertruck, right? Cybertruck's out there. They're showing off Cybertruck. If anything's going to Osborne anything, it's like you're going to have a minor refresh of Model 3, and that's going to Osborne Model 3. But Cybertruck's not going to Osborne Model Y, Model X, and everything else. Ridiculous. Thank you, Mark Clott. He says Cybertruck deliveries launch fourth quarter. That's uncertain. I do think that they will get the Cybertruck deliveries in the fourth quarter, probably very low volume. Might be 100 units or 50 units. I'm not optimistic about a large volume of Cybertrucks being delivered in fourth quarter. And I don't think that Cybertruck is that much of a game changer for Tesla stock long term. The next generation vehicle.
Okay, so all right, there's so much wrong with this statement. So again, I feel like he's just trying to find ways to talk down what Gary Black is saying. Okay, the Cybertruck is probably going to be delivered in the third quarter. Okay, maybe it flows into the fourth quarter. I think it'll be more than a few hundred. I don't know anybody that thinks it'll be a few hundred. I do think it's unknown because the ramp is a ramp, and you don't know about the ramp until it starts happening. I think it'll be at least a couple of thousand in the first quarter. I mean, in the fourth quarter. And I think that it'll be a major catalyst. Long-term catalyst? Yeah, I think it'll be a major long-term catalyst. I think that if it is as good as we think it's going to be, it will continue to be a major contributor to the bottom line. I think it will be, if it's as good as we think it's going to be, they're going to increase numbers until they get to 1 million or 1.5 million or whatever it is. They're going to find out what is the number, where is the stopping point, how far can we go with this? So I think it's a short-term catalyst. I think it's a long-term catalyst. And I think that he might have just been trying his hardest to find a way to not agree with Gary on this one. I'm not sure.
Platform is going to be 8 times as many vehicles as Cybertruck. Cybertruck will hopefully get to 1 million units a year. Maybe it'll get to more than 1 million units a year, but I don't even know if they have even begun to plan to produce more than 1 million Cybertrucks a year. For next gen, I think we're talking about potentially 8 million units a year.
Once again, to compare it to next gen is not to do what Gary Black is doing with regard to catalysts at all. He's saying, oh, next gen will be so much bigger than the catalyst for the Cybertruck. It's not the issue. Gary Black is making a list of catalysts. These are near term. Almost all of them are near term catalysts. Yes, he includes the compact down there for 2025 as number 9, but he's really looking at near term catalysts. Things are going to help the stock in the very near term. And again, it's going to. So I think this is a ridiculous argument.
Next gen is way more important for the future of Tesla. And also, we don't know that it's going to launch in Q4. Like if it doesn't launch in Q4, Tesla failed. It's Elon's fault. Elon was distracted by X and he was distracted by whatever, and he should have been in the factory making this work. Nonsense. They're making progress. I'm optimistic about it, but it's certainly possible it doesn't happen. FSD OEM licensing deal fourth quarter. That's unlikely. I mean, it's possible that they will announce a licensing deal for FSD, but I don't know that that's happening. We know they're in talks with somebody, but it's unlikely that's happening right away. And there's probably a lot of I's to dot and T's to cross to make that work.
All right, so this is Warren Redlich complaining that Gary Black is speculating. Now that's pretty funny. I built my channel. Warren has built his channel on speculation. Warren talking about a $20,000 stock value in the future. Warren talking about millions and millions of robotaxis on the road and how much that's going to make and how much Tesla is going to make off of it. there may never be a robotaxi. There may never be FSD that works 100% the way it needs to in order to be a robotaxi. So I think this is just nonsense for Warren to complain about the speculation. On the reality of FSD OEM licensing deal, I mean, he kind of says, yeah, it's probably going to happen someday and it's complicated, et cetera. I think if you ask Warren in a different setting, he would say, oh yeah, all these companies are going to have to license the FSD. What else are they going to do? And in fact, in a minute, he'll probably be saying almost that same thing because he doesn't believe that Waymo and Cruise have a shot ever of being successful. So let's go on.
And there may be more than just I's and T's. Or I'm gonna cover buybacks shortly, Mark Bott. He mentions buyback, and then somebody else mentioned buyback. We'll get to that. Stable auto gross margins fourth quarter. We don't know that auto gross margins are going to be stable. The Fed just raised rates. I think if they raise rates again, if there's more of a slowdown in the economy, Chinese economy is experiencing deflation, there's issues in China, all kinds of things going on. We don't know that auto gross margins will be stable. And if you're a long-term investor, auto gross margins in one quarter are not significant. The idea that what the auto gross margin is this quarter matters for 4 years.
Once again, all of his arguments in this particular case are not that great. It is speculative to say that that margins will modify, or they will be stable in the fourth quarter. It is speculation. Again, speculation. But it's speculation based on tremendous numbers of facts. I can't think of a single person out there that I respect. I mean, let's take Jeff Lutz, who just last week said he expects the margins to be much better in the third quarter and continuing. Because why? Because commodity prices are down, because the ramps are getting more successful. I mean, as they ramp up, you get lower and lower margins. As you get more and more cars made out of the same factory. Again, I think Warren would make all these same arguments that I'm making right now with regard to the future of the margins. We have also not seen almost no price cutting taking place. And what Jeff Lutz was saying was he thinks even with a little more price cutting that the cost of goods will have been cut by more, so that the margins will still be up in the third quarter. And I think he would agree. I'm not sure Jeff said this. I'm saying margins will even be better in the fourth quarter, and we might begin to see some price increases going into the fourth quarter as the economy seems to be kicking in pretty good. All the things that Warren said about other things impacting, absolutely true. Do these cuts, do these better margins mean anything long-term? Well, of course they do, but no, they're not a long-term issue. And Gary Black's not saying that. Gary Black's saying this is going to be a catalyst for the stock in the near term, very clearly. So Warren, you got to make sure that you keep your arguments in the right place. Let's go on.
Now is absolutely absurd. We know that margins are under pressure from macro. We know that. We know that. That's not a question. The high interest rates, the challenges in the economy, that's putting pressure on margins. That doesn't mean we're going to have the same pressures 4 years from now, or 2 years from now, or 7 years from now. That's pivot on interest rates fourth quarter. So Gary will say Tesla stock is down because of this, this, and this, and all of a sudden, apparently interest rates do matter. If the stock is down because of the earnings report, why are you focused on interest rates all of a sudden? So he switches his story around. Apparently he acknowledges interest rates do matter. $7,500 EV instant rebate.
I absolutely think that Gary Black would say that interest rates have always mattered. What Gary Black was saying, okay, interest rates are causing the car to have a higher monthly cost to consumers, and you could solve that by either lowering the price of the car. You could solve it by offering packages of leases and loans, through third parties or even out of your own balance sheet. You could be offering these loans at lower rates so that the monthly amount goes down. I think Gary would agree to all those things. And advertising is one way to stimulate demand, even in a troubled, tough economy. Elon chose another way. Was it a wrong way? No, I think it was brilliant. And I think that Gary Black was wrong to not acknowledge the brilliance, okay, of what Elon did in the first half of this year. However, what's brilliant in the first half of the year may no longer be the best path forward. Tesla needed to move a lot of metal. They moved a lot of metal. They're selling everything that they're making. They've done really well. They're at their 50% per year. All those things are happening, but advertising now might be the right way to go. The idea of having longer terms on leases and mortgages. Mortgages on loans. The idea of lowering the interest rates on loans. I mean, those are all additional levers you can pull, and there's so many more. They're all in the Elon Musk mission. If you haven't read the book, you should read the book. Okay, so anyway, sorry, Warren, don't buy your argument here.
Fiscal year 24. I think it's probably true that when the tax credit is treated as a rebate, when you're buying the car, you get the $7,500 off right away. That'll probably help sales. I don't know that that's a catalyst. This is the thing. That's not a catalyst, really.
Okay, so here's Elon. I mean, here's Warren himself now pivoting on exactly the same arguments that he made earlier. So if interest rates go down, and the Fed might lower interest rates in December, they might lower them in January, they might lower them in May. But at some point, if they do lower the interest rates, or even if they pause, that is going to be a catalyst for the overall market. And it's certainly going to be a catalyst for companies like Tesla that are moving large objects that cost a lot of money. There's no question about that. And it will be a significant catalyst. Gary Black is 100% right about this now. Is it fourth quarter? I'd love that to be the case. Is it first quarter? Still good. Is it second quarter? I'd be sad, but somewhere there's probably going to be a reduction in interest rates unless inflation starts popping back up again. There's no evidence other than oil that we're faced with that, but it is certainly a possibility. And then we go on to the next one, which is the opportunity for the individuals to take the $7,500 right off the price when they buy it starting in January. And he says, I'm not sure that's a catalyst. Are you kidding me? He says it's baked in. Everybody knows that's going to happen. Do you know, have you ever heard of something called a low information news person? You know, there's low information. Everybody has their own low information. Okay. I'm really high information on Tesla. I don't know nearly as much about NVIDIA. Okay. So there's a million people out there that know a lot about NVIDIA and they don't know anything about Tesla, who, when they see that on January 1st, all of a sudden you get the $7,500 when you buy it, they don't know it. They've never heard about it. It really wasn't in their thinking. And all of a sudden people are, oh my gosh, I can do that. And then they tell their neighbor, and this person's been thinking about buying. And I call them up and I say, did you know that now you can get it right off and then they go out and buy. And then all of a sudden there's an article that says, oh, with the $7,500 discount now, straight off when you buy it, people are rushing into the showrooms. And that's probably going to happen. And it will be a catalyst. And I'm sorry, Warren, you miss again. Let's see, we're going to go to the share buyback. All right, why don't we talk about the share? I don't really want to talk about the share buyback, but
what I have number 6 already priced in. We already know that. And by the way, the Fed's pivot on interest rates in fourth quarter is unlikely. Everything I'm hearing, the Fed is likely to raise rates again in the fourth quarter. I don't know. I don't know when the Fed's going to turn. I think
actually about 33% of the economists and others who were polled with regard to the Fed raising in the fourth quarter in December, actually, about 33% think they might raise in the December meeting. Almost nobody, or November meeting. I'm getting it confused now. I'm sorry. Let me think for just 2 seconds. We have the meeting that's coming up in September, and then the one in November. Yes. So September, no raise, almost certainly a pause. About I think it's only 10% think there will be a raise in September, and then about 33% there could be a raise in November. So Warren would be wrong on this on the facts. Actually, most people think it'll be a continued pause in November.
The Fed will turn around and start reducing interest rates in the spring of 2024 in advance of the election, because I have political views and I think they favor the party that's in power right now, right? So they want to help the Democrats win the election. My theory, I want to make sure Trump doesn't win the election or whoever else. So they're going to pump up the economy by reducing interest rates in advance of the election. That's my prediction. They don't need to do that at the end of this year. They do that early.
This is a very small point, but the reality is if the Fed wants to help the current president remain in power, they would want to start pumping the economy a lot sooner. For those of you who are old enough to remember the Bush recession ended well before the election, and the newspapers were still reporting the recession right through the election, but it was clearly over. Everybody that knew economics knew it was over, but it takes a long time for the public to get it. The public is going to be way more interested in the price of gas at the pump, whether or not they've had an increase in their paycheck, and whether or not they're paying more at the grocery store. Those are the things that they're going to be affected by, and you need to start, the economy needs to get on fire, and those three things to be better in January, February, March, April. You change those interest rates in May, it's not going to have an effect until September, October. You're not going to really help the current administration at all. So just a minor point there for Warren.
Next year, maybe February, March, enough lead time to lead to a surge in the economy leading up to November. Might even be March or later. I don't know. Tesla $10 billion share back fiscal year 2024. That's not happening. We're going to talk about buyback later. Tesla has said they would think about doing buybacks, but in the middle of a tight economy, they want to hold their cash. You never know when they're going to need that cash for something.
100% agree with Warren on this one. 100% disagree with Gary Black on this one. I don't agree with the idea of a buyback in 2024. A buyback in 2026 might be a possibility. I want the company to be so solid, using every dollar for every opportunity that can possibly come along, being prepared for any recession. There are other ways to help the community. The biggest way to help the community, the biggest way to help the shareholders is to continue to invest in the company and make sure that you're just blowing it out of the park in terms of all these wonderful products that you're developing. But I agree with Warren 100% on this one.
FSD Alpha version 12 level 4 release fiscal year 24. Alpha? They're not going to release an Alpha. What we understand is that Elon is currently driving an Alpha version of FSD version 12. As far as I understand it, none of Tesla's test drivers have version 12 yet, or at least none of the larger group of test drivers have it. We're a long way from that happening. I do think that we will see Alpha, FSD Alpha. I think we're going to see it this year. Judging by what Ashok said and what Phil Dwan said, I think we're going to see version 12 this year, and it may be no longer beta. It's not going to be Alpha. They're not going to release Alpha to us. That's not how software works.
So a little bit of nitpicking going on here. I actually think that Warren probably agrees with Gary Black and thinks Gary Black is too late on this one, that the next the version 12 will be out this year, that people will be potentially able to take their hands off the wheel, that we're getting really, really close to completing this journey. I'm still a little bit, we're already almost the end of August. I'm thinking maybe this is 2024, and maybe things will move rather rapidly in 2024. I would hate to see that. I would hate to have Stephen Mark Ryan be right on this after all these years, but he's always predicted 2025 as being when robotaxis would come out. I'm thinking 2025 is almost a lead pipe cinch at this point, but 2024, end of the year, first of next year, I'm not really interested in that. It's too nuanced for me.
And then let's see, $25,000 to $30,000 compact fiscal year 2025. Yeah, I think it's a subcompact. Maybe it's a compact. I think it's a compact utility vehicle and maybe a robotaxi, whatever. But why do people think this can be a $30,000 car? $30,000 would be barely less than a Model 3. Model 3 in China is like $33,000. It'll be a $20,000 car or less. We've said half the cost, Model 3 and Model Y. Half the cost. Half the cost. They can sell a Model Y, Model 3 for $40,000, selling a Model 3 for $33,000 in China. You can get a half the cost, that's $16,000 price in China. People are missing it.
Okay, again, can't argue with Warren here. Don't really know. I think that if it was a $25,000 car in China as a base car, or maybe less, 22, maybe even $20,000 base car, where the most expensive version of it was $30,000. So you have to compare versions or the various models. I think therefore a $25,000 to $30,000 compact car. I don't think that he was talking about China, Gary Black, in this particular case. I think he's talking about the US. So if we have a $25,000 base price on the US version of this car with a $7,500 discount, you're now down into the teens. If the most expensive version of it is $33,000 or something like that, the pricing on this, we don't know the cost of goods sold. We don't know yet what that's going to look like. We don't know how much battery it's going to have. There's so much we don't know. We're over a year out. So to argue about whether it's going to be 25,000 in the US, 22,000 in China, 23,005 in Europe, it's a little early to be arguing those, but we can all project and what our expectations are. Warren is saying his expectations are that we could be looking at a car that might have a base price under $20,000 in China. Okay, I'd be all for that. Hope it happens. And but that entire Gen 3 thing is really, really, really hard to predict at this point. But I do appreciate that Warren is always one who thinks outside the box and is thinking about how many versions could this look like? Is it part of it's going to go into a fleet? Part of it's going to maybe even be a pickup truck. This is the part of Warren I love, is the speculation, the outside the box thinking. So anyway, that's the story for today. I don't know, was this any good at all? Let me know in the comments. I thought that it gave us an opportunity to kind of look at all the different moving parts and all the kind of a lot of stuff that's going on over the next few months. And at the same time, take a look at how Gary Black thinks versus how Warren thinks versus how Randy thinks. And anyway, it was fun for me. I hope it was fun for you. Hit like if you liked it, hit subscribe, hit notify to be, later on today, we'll have our regular Monday morning, we call it, show, where we talk about all the financial stuff that's coming up this coming week and how the stock market is going to play out, maybe my speculation, and what Tesla is going to do next week in the stock market. All those things we cover tonight. So hit notify if you want to be reminded of that. And of course, tomorrow morning, bright and early, around 6:10 California time, we have the regular After the Bell show where we talk about the news overnight as well as expectations for the day, what's going to be happening in the market. All right, that's all I got for you. Oh, be sure to join Patreon. If this was worth $5, join Patreon. I'd love it. All right, that's it for now. Been great talking to you.